Something significant is happening in markets that most investors are missing. While headlines focus on volatility and uncertainty, over 50 publicly traded companies have quietly broken through 52-week highs in the past few days. This isn't isolated strength, this is broad market momentum. In technical analysis, 52-week highs matter because they represent breakouts above multi-year resistance levels. When stocks break these levels, they often trigger institutional buying and momentum algorithms. Let's examine where this strength is concentrated. Starting with technology, Google hitting new 52-week highs signals renewed confidence in big tech after a challenging period. The AI narrative is driving investor enthusiasm, and despite regulatory concerns, GOOGL is showing institutional accumulation. When a mega-cap stock with Google's influence breaks out, it often pulls the entire tech sector higher. Defense contractors are on fire. Lockheed Martin, L3 Harris, Huntington Ingalls, Kratos, and Ondas all hitting new highs. This isn't coincidence, it's policy. With Trump's proposed $1.5 trillion defense budget and rising global tensions, the defense industrial base is seeing unprecedented order visibility. These breakouts are backed by multi-year revenue trajectories. Gold miners are breaking out across the board. Barrick Gold, Agnico Eagle Mines, First Majestic, Kinross Gold. When multiple gold stocks simultaneously hit 52-week highs, it signals institutional positioning for inflation or geopolitical uncertainty. Gold miners provide leveraged exposure to gold prices, and these technical breakouts suggest metals may be entering a new bull phase. Travel and hospitality stocks are confirming the recovery thesis. Hilton, Marriott, Expedia, Southwest Airlines, FedEx. These aren't speculative names, these are industry leaders with global scale. Their breakouts suggest sustained travel demand despite economic concerns. The revenge travel trend that began post-pandemic appears to have staying power. ASML, Lam Research, Applied Materials, the semiconductor equipment manufacturers are breaking out. This is significant because equipment makers lead chip stocks by several quarters. When companies invest billions in fabrication equipment, it signals confidence in future chip demand. The AI chip boom isn't slowing, it's accelerating. Industrial names are showing real strength. Cummins, Oshkosh, CRH, Cemex, Southern Copper. These are cyclical stocks that typically lead economic expansions. When industrials and materials hit 52-week highs together, it suggests investors are positioning for growth, not recession. Manufacturing, construction, and infrastructure spending appear robust. Even retail is participating. Ulta Beauty, Estee Lauder, Ross Stores, TJX, Tapestry, Victoria's Secret, Wayfair. These stocks don't break out unless the consumer is spending. Despite inflation concerns, discretionary spending appears healthy across multiple price points. Here's the investment thesis. When you see 50-plus stocks across 8 different sectors simultaneously breaking 52-week highs, that's not sector rotation, that's broad market strength. Historically, periods of expanding market breadth where multiple sectors participate tend to lead sustained bull markets. This isn't one winning sector carrying the market, it's diversified strength. 50 stocks, 8 sectors, all breaking multi-year resistance. Whether you're a momentum trader or a fundamental investor, ignoring this many technical breakouts is a mistake. Markets are showing you leadership. The question is whether you're paying attention.